Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Stephen Dow from Velocity Mortgage. How you doing, buddy?
Fantastic. Yourself?
I'm doing great. I got to tell you, after the NASDAQ was down 5% yesterday, I started having flashbacks, almost PTSD, to my own .com crash. I know there's people out there today that are feeling pain. Maybe they capitulated. Maybe they're getting close. There were billions and billions of dollars of margin calls yesterday, which I'm sure are not fun. Again, all things I've experienced. And I just want to have I just want to share my experience with you because we both been around the block a couple of times. So the .com era, everybody's heard me tell the story. I made a bunch of money. I thought I was good. I was wrong. It was the market that went up. A lot like the last 2 years. There were probably people out there, David Portnoy, who got a little cocky because the market was rising. And they started talking derogatory about Warren Buffett, which I did as well. Not quite as bad as David Portnoy. But I was saying to myself in the 2000s, wow, I have figured it out. I am smarter than I remember thinking this. And I may have even told Olivia this. Boy, was I wrong. And ultimately, I got smashed, as I should have, right? You don't do the work, you get lazy, you bet the wrong way, you use too much leverage, you get smashed, which I did. But the reason I'm having this conversation with you is I think there's a lot of people watching this that are getting smashed like I did, that may choose to do what I did, right? Because I want to remind, I write about this in my first book, One Rental at a Time. So I just lost all this money, 80%. I lost 80%, folks. So I know how it feels. I'm defeated. I sell everything, go to cash. First off, I'm licking my wounds. I come back from a business trip to Europe. I'm totally depressed. I go to a Borders bookstore in Stevens Creek. I think it's actually still there. And I'm walking around, heads down, totally depressed. And I find Rich Dad Poor Dad, right? The purple book that's changed a lot of lives. And it set me on a new path. And what I think is very interesting is I think we're at a bear market. In the stock market. I think it gets worse from here. I think we have an economic recession. I think unemployment doubles and all this bad stuff happens. But I think more and more people will turn to real estate. Real estate is fixed. Real estate allows you to create great deals. The beauty about real estate, unlike stocks or cryptos or NFTs, is it's an inefficient market. You, the investor, could do your work in your buy box and you can create great deals. I just think that this pain that we're going through is just like the pain from 20 years ago. And you and I are going to have a lot more real estate investors in a couple of months because they're going to realize that the casino that is Wall Street is not for them. And simply one rental at a time is the way to go. What do you think?
Well, first off, although we're very happily from Velocity Mortgage Capital, ideas and topics discussed on the channel that of my own. But secondly, no, for sure. I mean, obviously, in any kind of market, up or down in the stocks, bonds, real estate, there's always competition for investment dollars. So I think when stocks are down, I think real estate is another good alternative for parking your investment dollars. So 100%, I think there's always going to be opportunities in any environment depending upon how you're positioned. And thanks to this channel, I think a lot of people are really getting the information they need to really take advantage of what's coming in many cases. But yeah, so that's my opinion.
It's funny. Real estate market is, it's not as liquid, not as quick. And that's actually an advantage. What we're going to go through. So I've said many times, and I'll just say it here, the Fed broke housing, right? And what I mean by that is they had 2 years of ultra low rates. Everybody refied. Black Knight, who is a trusted source of information, dude, get this. I don't know if you heard me on my daily financial news. This was a couple of days ago. Just a pure guess, pure speculation. What % of residential loans in existence today do you think, Stephen, have an interest rate below 3%?
At least over 67%, I would say.
It's actually 33%.
Oh, wow.
33% either purchased or refied sub 3%.
Oh, okay.
Right. So
maybe I'm getting some of the figures wrong because I remember hearing something about something similar the other day, but I think I'm mixing up.
You're mixing them up. It's okay. Yeah. It's all right. And then 50% of loans have fixed 30-year debt below 3.5, right? So again, these are all things that are important. So we really do have supply destruction and demand destruction going on right now. So real estate is broken. And then the stock market is instant pain. It just keeps getting worse. You capitulate. And then eventually people are like, you know what? Inflation is real, right? We did a 52-year spreadsheet, which we give away, showing that the winner of the 70s, folks, you got to go get the spreadsheet. From 1970 to 79, the S&P 500 went up like 1 point. Housing went up 100%. Rent went up 90 some odd percent.
Right.
If you bought in the early 70s at the low interest rate of the decade, your cash flow exploded. Your net worth exploded. You can get rich with inflation. It's called rental real estate, right?
Agreed, 100%. So I think it's just, again, not to keep beating a dead horse. And again, disclaimer, I have no vested interest in Mike's course. I don't get paid for any of this.
No.
But I really think that people just need to, take a look at the information and then make their own decision. But I think it really allows them to kind of build that skill set to really, see things in the right light. But I think real estate for right now at where we're at and where we're headed, I think it's a good opportunity if you do the work. Just follow the numbers. But there's a method behind all this, and that's why I'm saying even first-time buyers, they need to have this kind of knowledge and almost training in a sense to really look at things the right way. Because you buy an area, you love it, or this person said this that you're taking information from, but they got no expertise or real knowledge about the situation, and then you're in it. But then now you might like living there, but then now it might be just not a good investment. So then now it doesn't allow you to further yourself in life. But nevertheless, I think having the right mindset to begin with to really invest, not from an emotional perspective, but really from a numbers perspective, will allow them other opportunities and other options later on, not just for that time now, but for future. So again, circling back, because that's the reason why I reached out to you, was after I bought your course. I didn't reach out to you until then. So I really believe in what you say, Mike.
Yeah. So I think there's a lot of investors are going to repeat what I did. So again, I got cocky when it was easy. Right. How many of you will admit that? I think there's a lot of people that will admit that. I suffered amazing losses, 80%. A lot of people did that. I chose to sell out, go to cash, because I just couldn't take it anymore. Some people will choose to hold, to each their own, doesn't matter. You do you.
Right.
But what I was able to do when I started out the cash, that was my seed. That last 40 grand were seeds to 3 houses that began our growth. And if you want to know how it turned out, buy my book, One Rental at a Time, on Amazon. If you have my book and you liked it, please get me a 5-star review. I'm so close to 900 reviews. It's scary. So if you can help me get over 900, that would be amazing. But Stephen, if somebody wanted to reach out to you and get started on this, maybe be Arnold Schwarzenegger 2.0 and house hack a 6-plex, or they want to get a portfolio or blanket loan.
Right.
They want to do 90% CLTV, all these great things that you bring to the table. And again, 30-year money on apartments and office buildings, which you have helped me with personally.
Yes.
How do you want them to do it?
Just email me to SDAO at Velocity, the word mortgage, spelled out.com. In the subject line, just a simple acronym of ORAAT, which stands for One Rental at a Time. In the body of the email, just a simple description of what you're looking for, property type, maybe for the type of financing that you're looking for. Best phone number to reach at, maybe your FICO score would be helpful. And I'll typically be in touch within 24, 48 hours. So other than that, you can be like Arnold, but you don't got to be built like Arnold to get a loan from me. So give me a call. Yeah.
There you go. Well, folks, again, Velocity Mortgage has helped me out a couple of times. And they really do. People hear me say this and it doesn't compute unless they hear it a few times.
Right.
30-year money on apartments, commercial, office.
Oh, and it's 30-year amortized as well. So that's typically allow for maybe slightly better cash flow versus 20%, 25-year amortization. But nevertheless,
there you go. Reach out, SDAO at Velocity Mortgage. Remember, subject line, 5 letters, only 5 letters. ORAAT. Yeah, otherwise you get stuck. Thanks, buddy.
Thanks, Mike.